The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you. Participants in this podcast may also own the stocks discussed.
Welcome to Stock Tech. My name's Gaurav Sodhi. Joining me today is analyst Mickey Mordek. G'day, Mickey.
G'day, Gaurav.
And with us also is James Carlisle. Hey, James.
Hey.
Now, JC, I remember would have been about 5 years ago now, we got an unsolicited piece of analysis on a crappy little, what was it? It was like a marijuana stock or something like that.
Wasn't a marijuana.
Oh, it was? No, it was the poppy. It was the
was a
poppies.
poppy.
It
Yeah,
was
we got
the opium. Yeah.
Some kids send us this really quite detailed and
Well, he wasn't
lengthy-
just. He was an employee of ours
Yeah,
at the
that's
time.
right.
He wasn't just some kid.
No, yeah. Someone who worked in the sales department of InvestSMART, who I'd never met before. And I think he was maybe in a different city. I'm not sure about that, but he sent us an unsolicited piece of research on a poppy business. And that was our first introduction to one Mickey Mordek.
Oh, jeez.
And
Yeah.
then we did without Mickey. We promptly put it to one side and never talked about it again.
Well, I think JC was pretty kind about it. He said,
Yeah.
"I don't think we're going to invest in this one, but don't let us stop you." And
Yes, that's right.
Well, that's right, because you wanted to buy it, PA, didn't you? Is that what?
yeah.
Was that
Well,
partly
actually,
what,
fortunately,
You didn't?
fortunately, I got out of it because it was
did
yeah,
all right for a bit, didn't it? And then
Yeah.
it's
Did it
fallen.
do
It's been
all
a
right?
it's been a pretty bad performer. We're talking about I think it's TPI Enterprises.
Thank you. Yes, right.
And well, it changed its name now to Pala Pharma, but so I bought it, and then I quickly realized that they weren't actually doing much right, so I had to sell it, but I luckily managed to get out.
Well,
Hang on,
that's
so,
a
JC,
strong decision to make.
How did we hire Mickey after he wrote up a stock that we were completely uninterested in? What
Well,
was
it's
next?
not always. I mean, that's the thing. It's not always
just
about the
tricked
stock,
him.
and it's not always. It's a market, and there's always ideas on both sides of the coin, and it's a question of how you formulate those ideas, the approach you're taking, and
Oh, come on. We did not hire him after that. He had to do something else. I think he
Well, I
brought
think
up
I
another
was-
stock.
Oh
after
no,
that.
we went to talk to him. I mean, so.
I think it
Oh,
was
look, we
like
were already talking to Mickey, I think, at that
I think
point, because
I think
he
that was
was
just
taking
courteous
his.
because he was
Well,
working for us.
Well, no, but he was doing his CFA, and he was doing. You were doing some other degree, weren't you, at the
Well,
time?
I'd
I
been-
mean, you
so-
were working very hard to better yourself, Mickey.
Well, no, I was just kind of fortunate because so Mitchell Snedden sort of hired me. So he's the head of portfolio services, and so he made the intro, I think, to Alex. And at the time, Alex Hughes was coming down to Melbourne every month to see his girlfriend, and then so I sort of latched on to Alex, and he sort of helped me along in the early days, and then I think he spoke to you, JC.
Yeah, I think I had. Alex was talking up for you, which definitely helped. Yeah.
Yeah, and then I think you came to Melbourne, so it was quite fortuitous, really. But
It's
you
who
make
you-
your
it's
own
who
luck.
you know,
make
isn't it,
your own.
Mickey?
Well, you make your own luck. You were working very hard to do the
trick
CFA
Alex.
and that sort of thing, which shows that you were keen and you understood some things. You had a good way of thinking about things.
All right. That's enough of that. Okay, the point is that Mickey got a job with us, and now, unfortunately, he's leaving. Mickey, this could be your last. Well, you said it before. This is probably your last act as a intelligent investor analyst for the moment, right? Is it?
yeah, so we will have an article going out on United Overseas, and I think we've got a
Okay.
little so that's that'll
Well, that's
be
nice of you. Okay, so there's a bit more work to come for you yet in your final week. All right. We should add that almost every analyst who leaves Intelligent Investor inevitably comes back at some stage. So I'm going to wager, JC, I bet you that when Mickey has his first kid, he'll probably come back and work at II at some point.
Well, I don't know, but we'd love to see him. I mean, it's been
Yeah.
a pleasure. So
I've been really fortunate to work here. I think I'm probably really grateful for everything I think that the opportunity and so much to learn here. So yeah,
Now that's an excellent segue, Mickey, because I wanted to speak about that today. I mean, we actually have very low analyst turnover in this business. The three of us, so JC, myself, Graham, and Nathan, for that matter, we've all been here for yonks. John Addis, of course, is the founder of the business, so he's been here since day one. So there's actually very low turnover. So this is a good chance to actually speak to a leaving analyst. And I guess, Mickey, what I wanted to get from you was a sense of how you've changed as an investor, whether you've tried to change and how you're trying to change. So let's try and unpack that with a bit of structure around it. First of all, do you think it's important to actively change or to actively try and alter the things you do, or do you think you've sort of find an investment method and then just kind of stick with it?
Yeah, so I guess well, I think for sure I've definitely changed and developed my investing style. I think since I started, and I
No more
think
puppy
because
stocks?
well, not anytime soon. Although I haven't checked into that story recently. Uh, but yeah, I think when you first start investing or when you first start out, you don't really know anything, and so you just look to the people who have been successful, and and you hope if
Pre-
you read what they say or you find out what they say. So you read the Ben Grahams, the net style stocks, or the Greenblatts, the Magic Formula or the Lynches, and then you've got this growth at a reasonable price, and so
there is
you get
definitely a defined list of stocks that a newbie of books that a newbie comes to. Like
yeah.
I feel as though there's a standard list that everyone um, ultimately reads.
Yeah, and I think that's like I think that's also a pretty good place to start, because
Mm,
you get this sort of playbook about what's worked for them, but you kind of assume early on, I think, that it'll work for you, and actually that's how they became successful. But I don't think you can just copy what's worked for someone else. So you kind of got to continue to, I think, adapt and to find a style that suits you. And so and that's I guess the thing. And even within I think there's a lot of different opinions about, we're all value investors, but I think even within that there's quite a lot of different opinions about different things, and so you can sort of draw on that. But there's lots of different ways to make money in markets, and the game is kind of always changing, so I think you kind of have to continue to learn and grow and kind of build on top of what you already know, really. So yeah, I'd definitely say you got to continue to change and continue to learn and continue to find new ways to come at things. Like if you look at Ben Graham, for example, he's investing at a time when
mm,
there's a Great Depression. People literally can't access their savings from their bank account.
mm,
There's no trust. No one even knows what the stock market is. And then
mm.
today
And there's no
you've got
computers, right? There's no screening tools.
yeah, that's right. Like, so how, and so, back in those days, it literally was an edge to read an annual report or to buy a low price to earnings ratio stock, because, no one else even had access to that
Yeah,
information.
you probably had to calculate the PE yourself at that point. I don't know if it would have been published
I don't even know how
daily,
to
would it?
calculate a PE. But
Hey, JC, let me just check with you. Mickey was kind of the freshest analyst on the team, and you're probably the most experienced. Is what he is saying ring true to you as well? Do you
Yeah, I think it
still try
does.
and change?
Well, um, well, I suppose to start at the beginning, I was already 35 by the time I joined II back in 2003. It was, I think. And
Jeez.
so, I mean, I guess I'd already gone through quite a lot of that, and
Yeah,
that's, I
yeah.
suppose, that your first sort of 10 years are going to be, the period of greatest change. I think, where you're looking around. I mean, I was looking at charts, I'll admit, in
I
1990,
did not know that.
well, 91 or two. I'm talking
Right.
about here.
Okay.
I mean, it's a long way ago. That was while I was still a lawyer. And then eventually I found Buffett, and
Hmm.
that really put me on the right track, because he talks about valuation, and I think that that's really the fundamental that ties everything together. How you find value is a different matter, and I think people have different ways of doing it, but the ways that go wrong seem to me mostly to sort of distort it. When you're looking at just a PE based on last year's earnings,
Mm.
that's not valuation. That's pricing, isn't it?
Mhm.
And so I think and similarly, where you're following a stock, buying on a high price to sales ratio just because the sales are going up 20% last year and 20% this year, that's also not valuation. So there are ways to find stocks, and I suppose that's what we call style
Mm.
Mm.
within that overall sort of umbrella. And I settled pretty early before I joined, a few years before I joined I'd already settled on a fairly high quality sort of approach, and I've pretty much stuck with that. It's getting harder to justify though. The market seems to be,
Yeah.
seems to be of that opinion also at the moment. So, um, but I'm happy to keep slogging away with that, and I think the market will probably change before me.
Yeah. I, I I don't think I've actually tried to change. I've kind of have changed thrust upon me because I've tried a whole lot of approaches and some things have worked for a while, and when they haven't worked, I've had to adapt. So it's more, I think it's more adaptation than forced change for me. When I first joined I actually learned a lot on the job. I knew shockingly little when I joined. I wasn't totally aware that I knew very little. Um, and I think when you're new to investing, what you reach for is numbers. Numbers offer a certainty that your lack of experience doesn't provide. And I'm sure most new investors kind of grasp at the numbers and try and understand a very quantitative approach to investing. And from there, you really then need to add a layer of personal style. One of our teachers here, Hoff, always kind of says that you got to learn all those rules, and then you got to learn how to forget all those rules and get past them. But learning them is certainly stage one. And once you have all those tools, it's awfully tempting to reach for them all the time because they sound so elegant and they make you sound so clever. It really turns investing, which I think is very much an art form, into a bit of a science. And
I think that's an absolutely crucial point, because I think that's really, to me, why you find a lot of value in stocks at the high quality end of the spectrum, because I think people are drawn towards numbers and
Mm.
absolutely.
towards the obvious, and they're drawn to these valuation metrics, the price earnings ratios, the yields, and things like that. But those are all sort of linear measures, whereas the way businesses create value over the long term, that's exponential.
Mhm.
That's reinvesting capital at high rates, and that has an exponential quality which doesn't really get captured by a focus on the short term numbers.
Mm.
Mickey, did you start off by grasping at numbers as well?
Yeah.
You probably weren't as bad as some of us in the early days, I'd say.
Yeah, I definitely did because I was used to doing maths problems in school, and if you follow the correct method and you have all the variables, you get the correct answer. But and so you kind of when you look at a company, you think, oh, there's going to be the right answer in here. You just have to look at the accounts. You just have to put the numbers in the right way.
Hmm.
And I remember actually when I first started at Intelligent Investor, I was sort of screening for stocks on low price to book. And I think it was JC that said the one thing you should screen for really is just companies with a durable competitive advantage. And that actually did change the way I thought because that's what you're really looking for.
Oh,
That's
but
what
it's
gives you
hard
the
though. That's the
confidence
point,
to.
isn't it? Capital IQ does not have a little button you can press to screen for competitive advantages. That's the point. That's why everyone's screening for price to book and ROE and all these short term numerical measures.
Yeah.
And that's the knowledge that's right there in the market. And the harder knowledge, the harder thing to investigate is the competitive positioning long term. And like I said before, the market seems to be looking at that a bit more now than it used to.
Yeah, so that's definitely changed the way I've looked at it. But I think you still need to have a valuation. It does become possible, especially in today's market, to just
Yeah.
almost rationalize anything if you don't tether it to something. But
Yeah, I worry about
yeah.
that actually. We talked about this internally a few times, but I wonder if the lessons of the last 10 years, we've evolved under a very specific set of market conditions, and I wonder whether we've learned the right lessons. So I've gone
Mm,
from being very, I think, quantitative with my approach and very numbers based to now being ultra light on numbers. Valuation is the last thing I look at, and it's probably the thing I give least credence to when I look at a stock now. Most of the
mm.
time, there are some exceptions, but most of the time, it's the last piece of the puzzle, and it's the least important part for me. And it's worked over the last couple of years, but that might just be the market condition speaking, and rather than the strength of the idea speaking.
Yeah, you see, I would agree that the valuation is quite often the last thing I will look at,
Hmm.
but I wouldn't say it's the least important. I would say it's still the most important. I mean,
Yeah.
the reason I don't look at the valuation at the beginning is because I don't want to be biased.
Hmm.
You know, if you find a stock on a and you look at it and it's on a P of 100, then it sets your mind in a certain direction, I suppose. And similarly, if the P is on 10, you're expecting to see certain things. So I think there's a lot to be said for analysing it in a fair fashion, and then having a look at the valuation when you get there.
Yeah.
But
There've been a lot of stocks
at
though.
half the price, a stock's a much better prospect than at twice the price.
Well,
Yeah.
but given the same, but things usually change, right? So things usually change when the price moves, and you got to update your thinking,
Yeah.
as things change. And the price, everyone sees the price move, and that's a very clear and obvious variable that's moving, and you don't often see the business changes that are behind that price move. So it's tempting just to look at that price move and say, okay, it's doubled, so it's not as good an idea, but it
Oh
could
yeah,
actually be a better idea at a
that
higher price.
absolutely. Which is why you don't want to be looking at these things before you do the analysis. But that said, um, the valuation I think is still. I think you've got to look at it in a. I mean, ideally, your valuation isn't going to change too much as the business progresses. If it's unless it's progressing, better than you expected, just because it's growing sales or whatever, it doesn't really change your. Um, I mean, the question is whether it's going better than you had anticipated,
Yeah, look,
and
Well, I
whether the
think also
market
though,
and whether the market's pricing it for that.
like Gorev, I think it makes a good point though. Like I think because it can become really hard to sort of value things because we tend to kind of underestimate what hasn't happened yet, and especially in good companies, I guess, where you've got a great manager or they've just got everything going in their direction. You kind of underestimate all these ways that they could pull a rabbit out of the hat, and so maybe you could have a valuation, but it's in really great companies, you're probably always going to underestimate them. Um, and so maybe the valuation actually isn't that important. And these truly incredible companies, like I mean,
Well, but you want to
who would
know
have been
where the
able to
rabbits
value
are. I mean,
Google?
it's all very well saying good companies have the capacity to pull a rabbit out of the hat, but I'd rather see a good magician. I mean, I don't know. I'd rather see the rabbit going in there in the first place. Do you know what I mean? You've got to have an idea where those rabbits might come out, and then I think you've got to try to factor those into your valuation.
Mm.
Um,
yeah, I
if
guess what
you don't want to be investing just on hope.
yeah,
No,
well,
no, yeah,
we should clarify that the three of us have very different investing styles to one another. So a lot of these arguments we have every day, and they're not necessarily stock disagreements. This is mostly style differences coming out. Look, guys, I'm just going through my a couple of my personal holdings in my PE portfolio, and I just think all of these positions, Lavisa, Aussie Broadband, Australian Ethical, MinRes, Mac Telecom, these are companies that have multi-bagged for me over the last very short number of years, and I would never, if you were looking at valuations at the purchase time, you would say all these companies are too expensive. None of them looked good value, traditionally. I think that's the point I'm trying to make here is that, of course, valuation matters, and I'm not advocating you disregard valuation altogether, but I think often, or the old me, and I think, if I may, JC, the older intelligent investor, would have balked at buying companies that looked obviously very expensive. We did it, but not as I think as happily as we would do it now. What do you think about that idea?
Yeah, I think that's broadly true. I think we looked at stocks like REA and car sales fairly early on,
Yeah, that's
and
true. Yeah,
struggled
yeah.
to pay the
And
high
struggle to
PEs
pay.
for
Yep,
them.
yep, yeah, yeah,
So things like Reese kept us away from
yeah.
a while. But yeah, look, I mean, we got there in the end. But that was in a world where interest rates were higher,
Mm.
and I think that does make a difference to the P's you're prepared to pay if you think that those interest rates are going to stay where they are. That the long-term bond yield does make a difference to valuation. So, um, I think
Well, we've joked about this before, semi-joked about it, but I mean, if interest rates stay where they are, then technically, the correct value for the market is infinity because
That's right.
you've got
Mickey,
you've
put that
got
on a
this.
t-shirt. That's become your catch cry. Stocks to infinity.
When your discount rate is so low,
well, if
then
your discount rate is below your growth rate,
yeah,
then obviously your valuation is in fact infinite. But
yeah.
the trouble is that the world can only support so much. I mean, that you end up with every company owning the entire world. So
Have
that
you not
obviously
heard of
can't work.
Apple,
Um,
Google, Facebook, Microsoft?
well, they're not quite there yet, But I mean, so the point is that valuation, it's screaming at you that there's something wrong with what you're doing with the evaluation, and the answer to that is that stocks can't outgrow
But it's sort of what we're
your
seeing though as well,
your
because you've got
your
the
opportunity cost anyway.
Teslas and stuff that are trading at what look like insane valuations, but it's basically just the market saying you're doing cool things. Here's our money. Just go and do more cool things.
Yeah.
Yeah, yeah. I mean, and the bond yield, it's important to bear in mind, is not the opportunity cost that you should be. It's not the discount rate you should be using in your valuation of a stock. I mean, a stock should be priced to return more than a bond, because the bond um, is rock solid, and otherwise, if bonds return more than stocks over the long term, we'd all go bust. Um, so the governments would go bust. Their tax receipts wouldn't go up as quickly as their interest payments, etc. So you've got to add a premium onto that bond yield, and also remember that the short-term bond yield is whatever it is, 1-2%, or but the longer-term bond yield it moves around more slowly. So that's what is it, 4% at the moment, and so it's the long-term bond yield you got to focus on, and you have to put some sort of premium onto that, and so it's how the market sees those things and how you see those things that affects the price earnings ratios you're prepared to pay. Although I did say a moment ago that one shouldn't worry about those too much. Based on last year's earnings, I mean, what you've got to try to think about is what a stock could be earning in 10-20 years time, and what sort of growth that entails, whether if it does that, it's going to have lots of competition.
So, JC, as long as I can remember, I've that's the classic Carlyle approach. It feels as though that hasn't really changed all that much. As you said earlier, I think that's because you've done a lot of your evolution before you got to II. Would you'd agree with that? That
Yeah,
kind of
yeah.
it matters what the business is doing well, you rarely say 10 or 20 years time. You're often talking about sort of 50, 60 years time, to be fair.
Yeah, yeah. I mean, look, I think you've got to look. I mean, especially when interest rates are low, especially when your discount rate is low,
Hmm.
the more distant earnings become a greater part of your valuation, and
Yeah.
so I think you've got to sort of look in that way. But I've struggled over the last few years. I should have made more money than I have, because I have struggled to pay the high PEs.
Hmm.
I've struggled to take that low bond yield into my valuations the way the market has.
Yeah.
And I'm not saying I'm wrong about that. There's plenty of time for the market to be proved wrong about its valuations. So I think you've got to. I don't think it's wrong to have a reluctance to do that, but I also think it's good to be looking at those companies which have that long-term potential. I just want to buy them a bit cheaper, and I suppose I've taken profit in a few things before I should have.
Hmm. Mickey, how have you specifically changed over the last little while? Can you think of a few practical ways?
Definitely going through COVID, thinking about risks a bit more. Like I think you kind of when you're going through the risks, it can be you got to be careful not to make it just a box ticking exercise because you go, oh, there's this risk,
Yeah.
but
Yep.
actually, like over the long term, like risks will happen, and so some risks seem so remote that you don't really think about preparing for them, but actually they do happen, and sometimes they can happen really quickly, and sometimes you don't have much of a warning, or you can actually just ignore signals or like near misses. So yeah, so I think so you kind of got to invest on that basis. Like you got to obviously diversify
Mm.
in for company specific risk, but also try. I think that's why the quality thing is so important, because quality businesses tend to handle these kinds of things much better and emerge in stronger positions. So when you're thinking really long term, um, it's these risks will happen, and then so it's about investing in companies that can sort of navigate those external events, I guess, and sort of emerge stronger. And so I think that was a good
Interesting.
experience for sure to kind of see how quickly things can change, and just how yeah, I mean that was a pretty wild time last March. It's easy to forget now with the market where it is, but
Yeah, no, I remember it was properly scary. I think we all had a meeting on the day of the low, and yeah, I do remember a rather grim mood. We all say we're all happy to upgrade. I think JC was actually buying stock. I was nibbling a little bit, but
I
most
was
of
buying a
us
little bit too early,
a little
as
bit
it
too
turns
early.
out.
Yeah,
But I mean,
you were downright
I'm
gleeful.
always in too early and then out too early as well. I mean, that's the lot of the value investor, isn't it, I suppose? But
Look, it won't surprise either of you to hear me mention the word hustle,
mm.
which is really a concept I've pivoted towards quite powerfully over the last couple of years. And by hustle, in my view, like there are companies who just get shit done. Sorry, not shit. They get stuff done. They get to just get stuff done. They've got, and it's not about a great CEO. I think that's one of the greatest misnomers in business is that you need a great CEO to have a great business. Now, I'm not sure you. Well, no, you can have a great business without a CEO. But what's more important than that is just a wonderful culture, and hustle is street talk for a great culture that can actually get stuff done. And this really came to me when I was just thinking about companies and comparing them. So I remember when everyone would agree that Woolies is a great business, right? We all think it's a wonderful company. They got into hardware, which I think was a great idea. Bunnings is there earning these extraordinary returns with no major competition. Like I would have been disappointed as a shareholder if Woolworths did not try and capture some of that pie. So they did this half-assed, poorly designed idea, and they they went for it for 12 months. And when at the first sign it wasn't working,
Yeah.
they gave up. They shut the
well,
store.
I reckon it was the third sign. But anyway, yeah,
No,
I was still backing them until they pulled the pin, I should say. So
they pulled it
I'm no
very
smarter.
early at the
Yeah,
first.
pretty early. And
Yeah,
and and
very early.
and Westfarmers pulled the pin on Bunnings in the UK as well in
Yeah, that was
similar
interesting
fashion.
as well. Yeah, I think there
Yeah.
was more deeper stuff going on there, but Woolies was really an eye opener for me. And you compare that with, and what really got me into Domino's Pizza when Domino's first proposed Japan, it was entering Japan. It was a crazy idea, and everyone said they were dumb. The Japanese don't eat pizza, have no history of it, and that was the experience. In the first 2 years, their sales were miserable, and it was not working. And instead of pulling the pin, Domino's management actually moved over to Japan. They sent their senior people to Japan. They lived in Japan, and over the course of months, and I think it took about 12 months or so, they just figured out, okay, why isn't this working? How can we tweak this to work? And that is hustle. When you solve a problem with curiosity and dedication and tenaciousness, that's hustle. And I just realized that Domino's has this. They've shown they can solve problems, and Woolies does not. Now, they're both great businesses,
You
but
see,
I know where
So
I
it
want to
wasn't
invest
the
my
I thought
money.
you were praising Woolies when you said
No,
that
I
it
was
pulled
not.
the pin on. I think it was
No,
right to pull the pin on Masters with
I think it's.
hindsight,
I no.
because it never was able to get the right locations. I mean, it could have changed its
They have great locations. They
They had
sold their
some good
locations
yeah,
locations.
to Home Consortium. Home
yeah.
Consortium is
Well,
making
the
a
best
bomb.
ones they did. They sold the best. But look,
Bunnings took over some of their locations
yeah,
as
the
Yes,
well.
best
that's
ones.
right.
Look, as I
Yeah,
say, the best ones. But you've
yeah.
got to
No.
get the large network, the big footprint to make the thing
I just think
as
the difference
profitable.
there was hustle for me.
Maybe,
And
maybe.
now all my investments, that is the number one thing I look for. And more than the numbers. I mean, Lavisa was one. Well, I think I invested in that at sort of 40 times earnings, and and that was all about management who can really hustle and get stuff done, open stores quickly. They know exactly what they're doing. That for me, those softer cultural qualitative measures have become far more important than any numbers that I used to dwell and focus so heavily on.
But I think what you're differentiating there is the short-term numbers, and what you're so all of those business factors that you were describing go into what give the company a chance of making good numbers in 20 years time.
Mhm.
And so the numbers are important, but you've got to think, you've got to be looking ahead, not in the rearview mirror. I think is really the point, isn't it?
I'm going to bring up another example, JC, because I think this concept is really important. So Aussie Broadband. I remember when I bought Aussie Broadband to you guys as a Dragon's Den idea, and at that stage it was loss making. It had no competitive advantage, and that was one of the great discussion points in our internal review, was that it had no competitive advantage, except that it had a founder who's worked on this business his whole life, who's built it out of a regional Victorian ISP and has slowly grown. So it's the only advantage there was hustle, and it's been a wonderful recommendation, and
I
the
don't
whole
think
thing
we
was
were.
stitched together with hustle.
Yeah, I don't think we were against that. I
That was
think
but that
that
was
no,
the
no,
talking point.
that's not how I remember it as
Excuse me, did you
being.
buy it,
Mickey
James?
Mickey can be the arbiter on this. He was on my side if I remember rightly. It was how big a market they were going to be able to, you know, um, for a premium broadband operator, it's a question of how much of a percent of the market is their sort of top whack, and after that, yeah, I suppose you're flying naked. Your hustle and your culture can get you to, but are they going to have 50% of the market on it? So I think we were worried about, but they have, I think, last time you explained it to me, pulled one or two rabbits out of the hat, or they're going into other areas,
Yeah.
and that might produce the extra upside. But ultimately, you don't have to be in every single stock. I think
Mm.
if you can't quite, hustle, if you think the market is, you know, the market opportunity is capped, hustle only gets you so far.
Now, again, I'm going to put up another example to refute that. Okay, Macquarie Telecom, run by two of the best telco founders in the business, oodles of hustle, nothing but hustle. They started life as exactly like um, Aussie Broadband, nothing but a reseller of someone else's products. And for the first probably 15 years, that's all they did. And now they are a data center operator with all sorts of competitive advantages that are very easy to see. And I think that's what hustle gets you. You can start from one area and go into another, and it's not obvious. There's no straight line or any map that an outsider can see that gets you there. You just I think identifying hustle and kind of backing it.
So I think this is a beautiful point, because this is, we're all, I think, underneath it all, we're all talking about valuation, but we have different ways
Yeah, that's actually a good
of
point. That's
actually
probably true
getting to
of
the
getting there.
undervalued
Yeah, yeah,
stocks,
yeah.
and so you like to see a business that has hustle in its culture, and I have to say, trying to look more at culture these days. I think it's increasingly important, but
If I may
very
say so,
I find it
JC,
very difficult.
I think you were the first one to bring that into the Dragons Den.
Bring
I
one
seen
into.
the culture.
Oh
I,
well,
I
yeah.
never
I mean,
considered until you started talking about it a little bit.
oh well, thanks.
Mm.
But what I was going to go on to say is I find it very difficult, and
Yeah.
I still, so I like to see what you might call hustle in terms of the actual product, actual
Yeah.
thing that the company produces. Um, which I tend to call added value.
Yeah.
So underpinning a
Mm.
company's future success, everyone looks at the competitive positioning and Porter and all that sort of thing, but having a product which delivers massive value compared to its
Mm.
cost,
Mm.
if you can protect your competitive advantage supplying that, then it's that added value that really gives you the sort of safety net.
It's a wonderful
Um,
idea. Can you just explain for everyone, just with an example, because I think this is a really
well, a great
yeah.
example would be medical developments, which we've
Mm.
recently upgraded, which makes the green whistle, and they cost $40. And when you're writhing around on the floor of in a skate park with a broken leg,
Sound familiar, Mickey?
you know, that $40 is that's really good value right there. Um, but Ordinate is another one,
I thought you were going to
because
go with Ordinate actually first
yeah,
thought.
well, there you go. It's
Yeah.
it enables you to get rid of that spaghetti of cables,
Yeah.
and just plug everything into a computer. That's fantastic.
Mm.
And it doesn't cost a lot. It costs whatever is the chip or the software that goes into your computer to make it work, or into your microphone.
Mm.
Um, Altium would be another one.
Mm.
Helping people to design printed circuit boards. That's not just helping them do what they want to do, but the printed circuit board itself
Mm.
adds huge value to
Mm.
products, and so helping people to make those things. So this is all, I mean, I suppose the paperclip is the classic example, because it's just a piece of wire bent round, and yet it does an amazingly good job, for zero cost, near enough. The problem with that, of course, is that anyone can make them. So what you need, if you were the only person in the world who knew how to make paper clips, you'd do pretty well, I reckon.
Well, there's
So
that Japanese business. What's it called? That zip business. KK something. What's it called?
I don't know, but
Ah,
you've
there's
mentioned it before, actually.
Yeah, I've mentioned it
Yeah,
before. I can't
yeah,
believe I've forgotten the
yeah,
name. But
yeah,
if you look at the logo on your zip, if you got a zip somewhere on your clothing,
yeah.
chances are it's
But
what's it
can you
called?
can you
Yeah.
undo the zip with a magnetic watch like James Bond did in it was on Her Majesty's Secret Service? I think that's that's added value right there.
But that's a great example, JC, because you'd think that a zip is very easy and cheap to manufacture and just be made in China somewhere. But in fact, because if the zip fails, the
Yeah,
entire
you
garment
can have good
fails.
ones and bad ones, and
Yeah.
they are cheap. That's right. So that what it costs the company to make a zip
Yep.
compared to its value if it is
Correct.
a really good one and
Yeah.
works.
Yeah.
And that's yeah, that's added value, and I think that underpins. I mean, obviously, you need the competitive advantages, otherwise, everyone's going to come and make it. But
Mm.
that these things play together, and then I think the third leg of that
Mm.
is the management and culture, or the hustle that you describe, which is also hugely important. You really want those three things to be singing along in harmony, but it's hard to. I find the hustle bit quite hard to pick. I mean, I'd certainly try to avoid companies with sort of red flags in that area, but actually trying to positively select based on that, I think, is harder than. Yeah. So I prefer to focus on the added value and the competitive positioning, I suppose.
Mickey, do you have a metric or a shortcut that you use now that you didn't really use before?
Oh, yeah, and but I think I really liked the hustle idea as well. Like I think it's a really good way to think about um, business. But I mean, because as you kind of saying, like I think it takes a certain type of person to even start a business, really,
Mm.
because there's a lot of risk, and most people are happy, just getting a paycheck and not taking risks and not, things like that. So if someone gets a business to something special, they've already shown the ability to build a business, and then they can sort of apply those skills to anything, really, any industry. And I guess if you look at the best CEOs today, like someone like Jeff Bezos, he's done that over and over and over again. He's built a new, massive e-commerce business, and then he went off and built this massive, cloud business as well. And so those skills are really quite adaptable, and so I think that's a
And I think there's an
really good
important point you make there as well with around founders. The founder versus the sort of bring in hired MBA. The founder has proven hustle, whereas the MBA who comes in with a swag of
He's a
share
mercenary.
options
Yeah,
doesn't necessarily knows a lot of theory and doesn't necessarily have the hustle, but he may have a bunch of share options which really incentivize him to go for, or her to go for the Hail Mary, rather than, so it's risk, but it's calculated risk, and business is all about calculated risks, and doing the right thing at the right time, not just going for broke because you got an option set at the right price.
Yeah, no,
I
I
would
guarantee you that the guy who talked Woolies out of hardware was an MBA in a suit, never ran a business before, and just had all this theoretical knowledge about why that was a bad idea.
I would add, sorry, the other thing I think I've learned as well, was I think there's been certain businesses that I think just get kind of misunderstood,
Yep.
and
Yep.
like things don't always have to make sense for you to have a good product. Like I get the added value thing, but I think if you look at something like Afterpay, like we all kind of talked about, and we've already talked about this on podcasts and written articles about it, but we kind of didn't really get the product, and so we kind of just didn't see why anyone would use it instead of a credit card.
Yep.
We thought
Yeah,
through very
yeah.
analytical,
We
very
didn't understand the added
rational
value. We
edge.
were looking in the wrong direction for
Yeah.
for that
But
added value. That's
yeah,
right.
but sometimes you don't even necessarily need there to be any added value. It's just the perception of added value.
Vitamins,
It's
right?
not. Yeah,
If
like
vitamins work, they'd
placebo
be called
effects and.
medicine.
Yeah, I
So
suppose
you,
that's true, but that's I mean, yeah, there's definitely companies that do well just with the marketing, and I suppose what you would then say is it's that perception of value rather than the value itself. But I would say that for me, and that this comes back to style, that's just where it starts to get very hard. So I just try, I'm happy to see some added value, and if that means I miss the ones where the added value is a little bit more, then that's fine. The market can have those, and
yeah.
I feel a bit bad about not having 100 bagger on Afterpay, but
But I guess it's like
that's
it's all
okay.
about. I guess it's like when we come back to style, this is all about like how we're kind of trying to find an edge or trying to develop our
Yeah,
own.
well,
So I
that's
guess if
right.
you're looking for
Yeah.
hustle, or if you're looking for maybe ideas that don't make sense but are popular, you can probably like
Well, but
there's
I
lots of
think
different
that
ways
those
to.
ones that don't make sense, where there isn't any obvious added value, but where maybe there's a perception of it, those ones you're describing are perhaps the ones where actually there doesn't tend to be good value.
Well, if you so
There's
I
a few
guess
successes. I
yeah.
mean, that's not to say that there aren't occasional afterpays, but I think that as a hunting ground, it's not necessarily such a great place. And remember that with Afterpay, you're not getting 100 bagger anyway, because you're
Mm,
surely taking some profit along the way, as I think John Addis wrote the other day
well,
in that article about
yeah.
100 baggers. But so it's a question of where's the best hunting ground for you. That's what we're talking about with style, and all of these. So I think those are the elements, aren't they? That so you've got the hustle, you've got the added value, you've got competitive positioning, and ultimately you've got price. But those are the sort of hunting grounds, and how you personally feel able to judge things is. I think it's a dangerous game trying to. Well, I don't know. I've never been able to judge, this idea of perception of value, this sort of marketing edge, the vitamins and whatnot.
Mickey, if I can
Yeah.
just put words in your mouth for a second here, it sounds to me as though you're talking about if you're unable to identify the value, it may just be that you don't see it because of your personal situation or whatever. But we shouldn't discount that there might be value for others. So
Yeah.
the proof of huge customer growth and that might be enough rather than us trying to
Well,
pick
but the
out the
proof of
particular.
huge customer growth is somewhat backward looking. Although I mean, it reflects some momentum in the business. I suppose that's right. But but that's a short term factor that the market can see. So I think it's hard to have an edge over the market in something
Yeah.
But
like
if
that.
something
Something
is
something
growing
that's
though,
working. Yeah,
then
but the market can see that.
that's the market saying that's not the stock market.
No, no, no. But the
That's
stock market can see that.
that's consumers saying we like this product, and that's
Yes,
a
that's
really
right.
strong
Yeah, yeah.
signal
So
that
that's
you need to
yeah,
pay attention to that.
yeah.
And if you don't understand it, you need to find out what's going on
Well,
and
I don't think you do, because you don't have to be in every stock. That's the point. I don't think
but
you.
you should pay attention. I mean, if you should pay attention to something that's growing sales. I think if it's growing
Oh,
sales, that's a
yeah.
good sign
No,
that
I think that's dangerous. I mean, obviously, I'd like to see. I like companies that are growing sales, but I'd rather that was for reasons which um, perhaps the market doesn't understand so well. I mean, the
but like Afterpay is a good example. The market didn't really understand why sales were growing.
Yeah.
no,
You
And
and
know,
that's
I
and
certainly
because,
didn't, and I certainly didn't, and I've missed out on it. But I wouldn't necessarily say that's been the wrong thing. I wasn't shorting it. I don't think I was ever saying it was a sell either.
well,
Um,
yes,
so
there were,
I guess your
I was
point,
always saying
JC,
I would
though,
never buy it, but I
your
don't
point, I
think
guess, would
you
be
know.
like that you know it's dangerous to just extrapolate that if you don't understand it. I guess
Yeah, if
yeah.
it's your circle of competence. It's that whole thing.
Mm.
It's perfectly fair to say, look, something whatever's happening there is not something I would like to hang my hat on.
Mm.
And
I'd probably land more on Mickey's side on this one. Lovisa is another example. I think it was showing remarkable sales growth, and the economics were just stunning. And I remember the first time we looked at this, we were doing an exercise on retailers, and this one we used just an example, and everyone was flabbergasted by the economics and the valuation. I think it was about $3 at the time. And we just like I think the rest of the market did as well. We passed it off as being a fad, and I think that's the thing that the market
yeah,
often gets wrong. The market is mostly old guys in suits in an office who are already rich.
speak for yourself. I was not passing it, La Visa in that. I remember that
Mm.
development session, and I was not saying it was ridiculous.
Yeah, no one was saying it was ridiculous, but no one went off
I
and
was not passing it off as a fad either. I was saying it might be a fad. I have no idea,
yeah.
and therefore I'm not interested in buying it.
Well, the fact that I think most of the market did pass it off a fad, and I think often with these
Oh, the market may have, yeah,
yeah
yeah.
with newer companies, especially that are doing something that is unfamiliar to
Mm.
a lot of market participants, it does get passed off as a fad. Afterpay is one example. The Visa's another, and I'm sure there are lots of others.
Yeah.
So looking for fads which aren't actually fads. Well, no, but this is
Write
the
that down.
point, isn't
Yes,
it?
put that
It
down.
Or
might
something
be there
that's
may be something.
durable. Yeah.
It may be that some people have an edge in spotting fads
Yeah.
which actually aren't fads.
Well, if you look at
But
like
I'm not sure that. To me, it's that added value in the product
Hmm.
which gives you some grounding and something. So I find it's a different hunting ground. That's it.
Hmm.
I feel that the important thing is not to get sucked into someone else's hunting ground that you
Hmm.
don't really understand very well, and then that's when you get into trouble.
Yeah.
mm,
For me,
yeah.
I probably pay more attention now when I see lots of evidence of customer growth. I would in the past I may have dismissed it as saying, "Oh, it's a fad," but my first reaction is not going to be skepticism, and it's probably going to be, "Okay, let's try and look at this a bit more, bit of detail."
And that customer love is as well as kind of a concept that's popped up now, but it's kind of true. Like how that product makes these people feel
Hmm.
is so important because it's like that's what it's not what they're getting from it. It's how it makes them feel,
I've
and
said
it's
I'm the whip out a quote that I often use. Mickey, apologize if you've heard before, but the best businesses are the ones that can turn rational, sensible consumers into a bunch of idiots willing to pay pay too much. I mean,
lining up overnight at an Apple store or something, or
yeah,
um,
or paying $10,000 for a handbag, or some stupid amount for shoes, or for a T-shirt with a logo on it. Like these are all completely irrational acts,
mm,
and the company is convinced people, or something has convinced people to do it, and those make great businesses. Turning rational people into irrational consumers is a wonderful business model.
Yeah, no, it is.
But the question remains though. I'm sorry, I'm going round and round. But the question
I knew I,
remains
I
whether
knew I
you're
would not get
able
away with that.
to, well, whether you're able to pick those better than the
Yeah.
market. The market can
Mm,
see the customer
yeah.
growing the market. So the question is whether that gives you something whether you're better at spotting those than the market. And I'm not saying that
Yeah.
you won't be able to. I'm saying it's not for me. And I am also saying I think it's quite hard. I think it's much easier to see the added value in a paperclip, but then you'd think the market could see that as well. But I think the market often misses that those
I
points. The
think yeah,
market
it's
wants to
definitely
see
hard.
those numbers. The market wants to see the customers, numbers growing and all those sorts of things. Those are the sorts of things I think the market really likes to look at.
Mm. It's definitely hard. I just I guess it's just possible as well though.
Yeah,
It's not
no
an
doubt about that.
impossible
No
thing.
doubt. There were people who got into Afterpay for all the right reasons and made an awful lot of money, and I would say well done to them. That's but it's not something I think I could have done, and I think I will get myself into trouble if I keep trying to do that or start. Well, every now and again I do. I won't admit. You get sucked into things, and they're the ones that you regret.
Well, Mickey, we should probably wind up this podcast. You know what? I don't know.
We
There's
haven't
one.
had the dog. Where's the dog?
I know. I was going
Well,
to say we need a special goodbye from the dog.
the dog and I
The dog's
prepared
name
for
is?
this podcast
Podcast.
today. Yeah, no, he helped me prepare today.
Oh, right. Okay. Yeah.
By going outside and lying down.
Sounds like a good
Having a
idea.
snooze. Yeah,
He's sitting in the sun at the moment, but
Now,
I'll
Mickelson,
try and get him on one day.
we would love to have you back on occasion. So don't forget about us, and we'll try
Don't
and
be a
get
stranger.
yeah,
That's it.
we'll try and get Mickey back every now and again.
Yeah.
But maybe you'd like to do the send off, Mickey.
Yeah, sure thing. Yeah, I guess thanks for everything, and thanks for having me, guys, and thank you to all the members as well for all the nice comments, and yeah, so thank you very much.
It's a bit of a rookie sign off, but okay, I'll come in and rescue you.
Well, that was my best take. Members haven't even heard the other
Oh,
20
the others,
takes.
yeah,
So.
yeah, we won't trouble them with that. We better wind it up anyway. JC, thanks very much for your time today.
Been a pleasure.
Mickey, you've been a wonderful colleague and a wonderful friend. I hope that doesn't change. We'd love to have you back at some stage, but fingers crossed, we'll see. Thanks very much for your time, and don't be a stranger.
Thanks.
For everyone else, thank you for listening.